Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. It's a down day again, and we are at the 24,600 mark. We have not gone below that, but off the high point of the day, which was 24,700 today. Midcaps are outperforming, though, and Nifty metals and IT, that is keeping the market afloat.
That's right. Good afternoon, Sonal. Volatile trading session and a lot to discuss on the show, especially with regards to some important outcomes coming in from the Karnataka budget. So let's start off with the top headlines. No sign of Friday cheer on Dalal Street. Nifty skids and falls to sub 24,600 levels. Action on broader market indices mixed. Metals and IT hold ground, selling accentuated in financials.
Branded hotel ownership and asset management platform Sami Hotels will acquire a 70% stake in Rare India for 47.39 crore rupees. The management tells CNBC-TV18 that they plan to grow the existing Rare Hotels business from 2.5 crore rupees to 90 to 100 crore rupees in revenues.
Consulting and AI product firm Fractal Analytics reports strong revenue growth in the third quarter, while margin also expands. The management tells CNBC-TV18 that the company will also be a net beneficiary of the AI boom.
Okay, all right, those are the top headlines that we are tracking. As we said, it's been quite range-bound since the start of the trading session. We started steady, but we fell from the highs of the day. But there are a couple of stocks in the broader markets which are buzzing in trade. Jupiter Wagons, for instance, is up 15%. We have DCX Systems is the other stock, which is up around 14%. Ircon is up around 10.5%. A lot of these shipbuilding stocks are doing really well. Mazagon Dock, you have GRSE, Garden Reach Shipbuilders. So these stocks are on our radar, have been buzzing off late. Bellrise Industries is the other one, which is up around 5.5%. And a lot of these defense stocks also continue to be on our radar. Bharat Dynamics, for instance, is up around 5%. We do have Paras Defense as well, which is higher in trade. So yes, mid-caps are outperforming the benchmarks, and there are a couple of stocks, though the headline advance decline ratio, it's absolutely flat.
Absolutely flat. And like you mentioned, the defense team continues to play very well. Names like BDL, names like Bharat Electronics, HAL, most of these names that have seen a bit of a stellar rally are doing quite well. Even some of the smaller names like DCX Systems, all of these names actually going ahead and outperforming in today's trading session. Now, what's not doing so well? Look at names like the mid-cap IT names like KPIT Tech. That particular stock continues to languish in the session. Another stock that's seen quite a bit of selling pressure emerge is the Ashok Leyland. That particular stock too has cooled off near the day's lowest points. Bharti Airtel, another stock that opened very strong in the session, but that particular stock too has now fallen to the day's lowest points. A couple of other names on the radar, both of the wind turbine manufacturing companies, Inox as well as Suzlon, have seen significant selling pressure. Inox Wind today at a fresh low as well. But moving on, an important development, Karnataka government introduces the alcohol in beverage excise duty structure. Mangalam joins in with more details.
It's an extremely important development that has taken place at the Karnataka budget today. Two things for the alcobev industry. The budget has introduced an alcohol in beverage excise duty structure. So what this basically means is starting April 2026, taxes on alcohol would be levied basis on alcohol content rather than alcohol volume. Now, what does this mean? Currently, if you go ahead and buy any sort of alcohol, the taxes are levied on the content, on the quantum of the alcohol and not the content of the alcohol. So basically, beer would be a lot more expensive because, it was a 1 liter bottle that you were buying. It would be taxed at par with, say, whiskey, which was, again, a 1 liter bottle. But the alcohol content in beer was a lot lower than that of whiskey, and that put the beer industry at a bit of a disadvantage. The transition obviously will be phased over the next 3 to 4 years to avoid market disruption. So it's a step in the right direction and progressive. That's exactly what United Breweries told CNBC-TV18 as well. We've also got a flash note that is coming from Nuvama's Abneesh Roy. He says that they maintain their buy on United Spirits, United Breweries and allied vendors because Karnataka is one of the most important states for the country for alcobev consumption. IMFL, 15% of the country's volumes are accounted for by Karnataka. This deregulation, which is the second announcement that is coming, is also positive because the existing 16 price slabs will now be halved to 8 slabs, which means that there could be a lot more freedom for alcohol companies to go ahead and change their prices as against getting it changed by the government itself. The government also looking to tap into alco beer tourism, and distilleries and breweries will be allowed to host tasting sessions and sell products directly to tourists on their premises. Basically, what this means is a slightly more favorable approach made to this industry by the government, and the stocks are reacting positively. United Breweries higher, Allied Blenders higher, United Spirits, the only F&O stock in the sector, is higher by about 6.5–7% as well.
Hey, all right. Thank you so much, Mangnam, for explaining this change that has come by. An important one at that, as Mangnam mentioned, it's a positive for the industry. Let's understand more on this and welcome Vinod Giri, who is the Director General of Brewers Association of India. Mr. Giri, good afternoon. Thank you so much for joining in. If you can give us some stats first, how much does Karnataka account for in beer industry's overall consumption, and how significant is this move?
Well, yeah, Karnataka is one of the most important markets, and it's nearly, you can say, about 12% of the national beer volumes are accounted for by Karnataka. And more than just the share of volume, it's also historically been seen as the beer capital of the country. And we have 10 operating breweries in the state, which is the highest for any state in the country. So for the beer industry, the stakes in Karnataka are very high. It's also always seen as one of the more progressive states in terms of regulations. And so any development in Karnataka is of great importance to the industry.
Well, Mr. Giri, thank you so much for your initial take. Also what we want to understand is how does this particular development impact the beer market versus other spirits, other alcohol, other forms of alcohol. Now, and the reason we're asking this is we want to understand the impact that will happen due to volume and not based on alcohol content. So does the beer industry stand to gain more?
Globally, the principle of taxation is based on the fact that people drink alcohol, not the water. That's a fundamental principle. So most of the countries in the world, and all OECD countries, and a majority of South American and various countries,
that we have with you currently. We'll have to hold on. We'll try reconnecting with you, but that is an important commentary coming in that Karnataka is currently 12% of the total beer volumes in the country, and Karnataka generally is more progressive in terms of policy, and any development in Karnataka is positive for alco bev space in the country, and the stocks are surging on the back of this positive news flow that has come by. We'll do one thing. We'll slip into a short break. When we come back, we'll try to connect on that line again and get you more on what's happening with the markets and stock-specific action.
Welcome back to Mid-Cap Radar. Well, let's reconnect with Mr. Vinod Giri, Director General of Brewers Association of India. Well, thank you so much, sir, for joining us once again. Well, the question we wanted to ask you is what's the current differential between beer as well as other alcohol in terms of volume and not alcohol content?
So, because of fundamentally the tax structure in India historically is based on the volume of the liquid, which is the bulk literage it's referred to, or the ad valorem taxation. So the tax in real terms, effective terms, which we define as the tax per ml of alcohol, actual alcohol, is much higher in case of beer. And if you take on an average in India, it's about, say, 1.5, 1.6 times that of beer. And this goes back into the history of how the alcoholic beverage industry evolved in the country. But the fact is the rest of the world treat taxation on alcohol very differently. They link the amount of tax with the amount of alcohol present in the liquid, and it's called the ad quantum taxation model. We are very glad to see that in the budget notes of which the Honorable CM read out. It's exactly, he mentions this fact that the taxes on any alcoholic beverage should be linked with the amount of alcohol inside it. And just to give a larger perspective related to your question, while the beer, for example, which is a low alcoholic beverage drink, accounts for about, say, 33% of all alcoholic beverage in bulk literage consumed in the country. In terms of the actual alcohol consumed, it will be less, about, say, 10% of the total alcoholic beverage consumed in the country. So that's a kind of reflection that the lower alcoholic beverages actually are much less alcohol in them. They are considered to be a much more responsible form of alcohol consumption.
So, Mr.
Because of
Devi, we get that point, but just trying to understand whether this is incrementally benefit for beer. As you said, the content, the alcohol content is lesser in beer versus, say, other alcohol forms, that is whiskey. Would this mean incremental volumes for beer, since taxes will be lower now, so pricing could go lower, and that would mean higher volumes? And secondly, it is over a 4-year period, right? So how do you expect the transition to be?
Absolutely. So in the first phase, what we expect is the correction which is long overdue in Karnataka. In the last, say, about 2 years, there have been 5 tax increases on beer, which have pretty much dragged down the growth in the beer industry. And we have a situation where in Karnataka, per se, the beer industry is down by nearly 25% this year as well. I think the first thing we would start doing is correcting this anomaly in taxation. And if the beer industry comes back to its growth pattern, which it used to have before May 2023, when the tax increases began, we are going to see significant upsides. Karnataka is one of the largest beer markets in the country. It's a trend-setting market. And if the positive upswing starts from Karnataka, we will have similar effect in other states. And just as a matter of record, many other states have started looking at taxation on milder alcoholic beverages differently. And one case is Maharashtra, which last year in September did that.
Right.
So we are going to see upswing, definitely.
Well, thank you so much, sir, for joining us, giving us immediate perspective on what the new developments at Karnataka means for the alco-bev industry. Thanks once again. Well, moving on from the liquor industry to the large infra space, let's now connect with the management of Tech Wabag. Remember, the company derives close to 30 to 35% of the order book from West Asia. To discuss the impact on the order book and demand trends moving forward, we're joined by Rajiv Mittal, Chairman and Managing Director at Tech Wabag. Well, thank you so much, Mr. Mittal, for joining us. Well, the first question we want to ask you is, what is the current on-ground situation as far as your projects in West Asia is concerned? Are all your employees safe, and has there been any damage as far as any of your plants or projects are concerned?
Good afternoon, and to you and your viewers, and thank you for having us on your show to clarify this position. First and foremost, let me clarify and answer your question. No. We have sites in West Asia, especially in the Middle East, which is today a disturbed zone. There is no disturbance at all at any of our sites. As you know, we are specializing in treatment plants which are technology oriented. So we are confined to a particular site, and we don't do cross-country like pipeline work, canal work, and all such work. We are at a very confined site. And these sites are far, far away from US base. So there has been no damage to any of our plants which are under construction or which are under operation and maintenance.
Okay, take that point, Mr. Mittal. So there has been no issue so far with the activities of these sites that you have in West Asia. Just confirming, your exposure to West Asia is around 30 to 35%. The facilities that you have there in terms of order book, how much is it?
It's about 25% at the moment. We have a pipeline, a solid pipeline, where we have a preferential position of another 10%. But as of now, which is in our order book, is close to 25%.
Okay. So the current order book is 25%, and you're favorably placed in another 10% of orders. Understood that. Now, the other thing we want to understand is, especially as in Q3, one of the large projects that was in Saudi, you said that you expect that particular project to hit commercialization soon. In that particular project, will we see some delay? Is there a pause as far as activity there is concerned? And would you need to take some sort of a hit?
Not at all. As I said, we are in a water business. As you know, the Middle East lifeline today is water, and most of this water is derived from desalination because they don't have fresh water sources. So our plant, even what you are referring to, is a desalination plant. Right. So I don't think there will be any hit or any delay, because in fact the crude prices going up will only favorably enhance or expedite the notice to proceed so that we can go ahead. But at the moment, we are doing the engineering back in Chennai in India, And as soon as we get a go-ahead to spend the budget, we will move to site and start our construction activities.
Mr. Mittal, you do get funding from international agencies, right? Do you think that is something which could be at risk, considering that there's so much happening globally, especially in West Asia? And also, do you think there could be some supply issues to your facilities in terms of raw materials? Is that a possibility at all? Or you think that will also continue the way it is happening?
No, I don't think so. And you're referring to multilaterally funded projects, which are mainly not in the Middle East, because most of the Middle East projects are funded by themselves, especially oil-based economy. So there's hardly anything which comes from the multilateral agencies to fund our projects. So I would say, first, there is nothing of that kind. Second, you're talking about supply chain. Hardly anything we or that region manufactures is very limited. Most of the things are imported into that region. So we also don't see there will be a major issue on the supply chain.
So very briefly, moving on from the West Asia impact, one particular question that the street needs clarity on is that a lot of players who are present in water projects in India have spoken about collection issues. Have you faced any such issue? Are most of your projects from the private side? And again, funding over here, is it multilateral funded or is it from your clients?
Very good. I think you're talking about funding issues, payment issues on some of the projects, especially Jal Jeevan Mission and all that.
Sure.
We have clarified this before also. We do not have even 1 rupee on our order book from such initiatives of the government, which is like Jal Jeevan Mission. So there's no question of delay in our payment. As we said earlier, most of our projects are multilaterally funded or backed up by letters of credit. So we have not seen any delays in payment, neither we are expecting in future any delay in the payments.
Okay, all right. Thank you so much, Mr. Mittal, for joining us with that clarification. So that's the word coming in from Tech Wabag. They do not have any issues in their facilities at West Asia, and the business continues as is. Slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Welcome back. We've fallen below the 24,600 mark as we speak. The mid-caps, though, have recovered from the lows of the day. The advance decline ratio is quite flat, actually. 1,450 stocks on the advancing front versus 1,500 stocks on the declining front. But yes, markets have come off from the high, so we'll keep tracking those market moves for you. For now, we'll take your leave on this edition of Mid-Cap Radar. Thank you so much for tuning in. Your stocks when we return.